Well, it's time now for Futures in Focus. Oil off its lows of the session, gold gyrating and silver touching its lowest level since April of 2016. Joining me now from the CME is Alan Knuckman, Chief Market Strategist at Bulls-Eye Option. Alan, let's start with the oil market. What exactly does the oil market want? It's trading just above $44 a barrel again, and there's another OPEC meeting in 2 weeks' time. What does the oil market want to hear?
I really don't know. The oil market's getting a little bit active in the fact that it trends in one direction, then U-turns and trends the opposite direction. So last week was really important. $47 is the halfway mark of the $52 high that we had down to that $42 low. So it came back to 47, hit that wall of resistance, and then bounced lower one more time. So that was an important turning point so far. Let's see what happens this week because we hadn't seen any technical recovery action for weeks and weeks. And finally, when we saw the short covering, it bounced up, hit that 47, and it's come straight off that.
The increase in supply from Libya and Nigeria, has that been enough to spook the market a little bit? Is that why prices are off their low, or do we expect something else to move the needle there?
Well, I'm not exactly sure what it was, but you could see a heavy volume come in when we made those highs last Wednesday at 47, and then it just turned tail and headed back down. The overall trend here, obviously, in the last couple of weeks has been downward. So it was important as a trader to judge how the market reacts or fails to follow through, and it failed to get through that 47 level. So you saw some of that short covering halt, and I think it was more a technical reaction than anything else.
Let's talk a little bit about precious metals. Gold to begin with. Alan, we're not seeing a lot of direction today, but we are back down to the 12.10 an ounce range. Right. Where do we go from here, given that central banks are maybe getting a little more hawkish these days?
Yeah, that's very interesting that it's central banks outside the United States. The United States talks a tough game about raising rates, but that's not going to happen. Maybe one more rate hike this year in December, and it's, I guess, about a 50-50 chance. But the dollar's been on the decline, and so it's really interesting to see what is not happening. You know, we've got a lot of geopolitical concerns around the world, and gold's been on a slide. It's been straight down. We had kind of a double top in gold from $1,300 an ounce in April and May, and when it couldn't push through $1,300 in May, we saw some major disappointment, and it's been straight down since. Let's see if the 1,200 level can hold, but it's so it's disconcerting that the dollar hasn't helped gold at all, even though the dollar's down here at 9-month lows.
And what about silver, Alan? Is this purely a supply-demand story, or is there something else going on with silver?
Well, I think silver just follows gold most of the time, and you're seeing some profit taking and some unwinding there as gold continues to move lower and lower. I think a lot of this is money flows, and I think you're seeing some money flow to talk about a market that I look at as positive. The NDX, we trade the NDX futures here at the CME Group. The NDX may be stabilizing the big tech stocks, so you might see some money flows going there. And something we've seen every time in history is every time we've seen a sell-off in tech, it's bounced back the distance of the sell-off on top of those old highs. So if that happens one more time, the NDX could move up almost 10% from where we are now.
All right, well, have a great day's trading. That is Alan Knuckman, Chief Market Strategist
Thank you.
at Bulls-Eye Option with today's Futures in Focus.